Yo, 365, shake my hand. Good afternoon, good morning, good evening to wherever you are in the world. Welcome to, something that I keep saying I'm going to do separately outside the war rooms, and I'm going to do it right now, right? So it is a live video, but, whenever you watch it, do let me know if you like stuff like this. But we're going to be reviewing last week's trades. Today's Sunday. Those of you who are watching live, and every Sundays, we've got the actual weekly forecasts. So ideally, today's video should have been done yesterday on a Saturday, which is what I'll be doing now. We need to review the tape. We absolutely need to review the tape. And I'll tell you why. Friday was the last day of one-on-ones with my senior trader. So I finally finished every single senior trader in the academy who wants to have a one-on-one. I did a total of 86 one-on-ones in the last almost 35 days. So the last week of March and every single day during the week of April. And I'm finally done with my senior group. And even in the senior traders lounge, right, there are some things that can be solved. There's a little bit of trading that can become even better, right? Good should never be the enemy of great. You can always become better. You can absolutely always become better. And it became clear in the seniors, lounge, right? And don't worry, if you're a registered student, your one-on-ones are coming next, right? So that's how it normally works. I do the senior guys first, and then everyone in the education group. But even there, I saw that we need to go back to reviewing the tape. So that's what I'm going to be doing every Sunday. I'll give you guys weekly signals, weekly analysis, weekly forecast live at 4:30 p.m. And then I'm going to come back on the Saturday before the next war room to do a review of the tape, to discuss what worked, what didn't. And as you can see with the title of the video, I technically had a 1,000 US dollar week from the trade signals that I gave you guys for free on this channel. And, remember, amounts are not the issue here. You're not chasing a 10,000 week, a 3,000 week, a 1,000. That doesn't matter. That's fundamentally based on my lot size. My lot size for me is always based on my capital, right? So what you want to get out of this session, and in general, all sessions, all academy war rooms, isn't the money. The money is not important. It's literally the retention of the skill, number one, in relation to your capital, number two, with the pillar of risk management, number three. There are three trading pillars: the trader, his psychology or her psychology, and then the trader's risk management skills, right? So when people show you big amounts, I'm not saying 1,000 US dollars is a big amount, whatever is big to your head, when people show you that kind of stuff, always, please, always remember that as long as you don't understand their capital, it's a terrible idea to compare yourself to them, or to even think that your account is not growing. 100 US dollars can grow, right? Everything grows, right? So let's get down to this, guys. I want to make this a very short video. It's 12 p.m. now, so that I can be back at about 4:30 today to do an actual war room. So all I'm going to do is review. And I want to also be honest right off the bat. There are two reasons why I'm doing this. Number one, I want to quickly, every week, lament and put it to every single human being's face, the overall superiority of supply and demand as a trading strategy. Yes, there are people who claim trading strategies are all equal. They are lying. I believe you can make money with different types of trading strategies. What I'm saying here is I believe that supply and demand, smart money concepts, increases the odds of reducing losses, right? If this is, coupled with good risk management, good supply demand reading, good chart work, a good desire to learn, all that kind of stuff, right? So that's another reason why I want to do this, right? So most of the stuff we're going to be talking about is going to be based off the war room that I did for you guys last week, Sunday, War Room 63. So once again, take your time to subscribe to our channel, right? So it's just going to be these assets. It won't even take us time because I've already done the analysis. I've spoken to the analysis, last week, Sunday. So we just want to go back in time and see, had you followed these things, would you have made money? Would you have lost money? Would you have made more money than you'd have lost money, or lost more money than you'd have made money? This surely would give you an indicator as to whether these war rooms are a waste of your time or not. Right, so without wasting too much time, I'm going to be looking at gold, USDJPY, AUDUSD, Swiss franc, Euro AUD, Pound, Swiss franc, CAD, Swiss franc, CADJPY, Pound AUD, NZDJPY. Everything's got timestamps now. I am doing this because I want you to always go out of your way to prove if I'm lying to you or not. And I tell you why. Human beings by nature are skeptical. But in Forex and in trading, being skeptical is generally a thing that makes the most sense. Being skeptical in Forex because of the scams and fake gurus and mentors and all that kind of stuff. So you want to go back, just click here and just go. You can see each analysis, each chart. When you're looking at chart to chart, each chart is about 6 minutes, 5 minutes per chart. So you can actually go back and review what I said when price was where it was and what happened that week. I remember for me, once I do a war room, I either wait on midnight or first thing Monday morning, I sit and forget. I remove all pending orders if they've expired in my process, looking at structure, and then I put in new ones, but I always sit and forget, right? So that's what we're going to do together real quick. So the first chart we're going to look at is silver. Right, we're going to look at silver, and then I'll tell you right now. So maybe do it this way. So there are 10 charts that we looked at last week, from the trades that got triggered on my end, right? So I had one very good trade. It's still running, right? Swiss Franc JPY was the only big trade that I had, which was trade number 4 from this idea. We did about 138 pips. I don't know how many of you are in it. And then we had one serious loss, which was CADJPY, which, by the way, we already spoke about in the war room on Sunday. It was now too late for me, right? I was actually hoping for price to retrace and break even so I could get out, but I never got that chance. But we'll get to that particular chart. The rest of the charts that we looked at, we are either waiting for better sell setups or they were cowboy trades that actually worked out, but I was just not interested in taking because I said on Sunday I wouldn't take them. So when the time came to take them, when I got those alerts, I just stuck to my script on Sunday. All right. And then we've got a couple of, some trades that I need to discuss here that I gave you guys in the public Telegram group. The link to the public Telegram group is down below. Really looking at the US market, NASDAQ, US 30 and SP 500. So those are kind of like charts that I just want to look at. And I don't think this video will go beyond, these two things. And I sent this on the 11th of March and inside our public Telegram group. Right, so let's look at silver real quick so that we don't have to do these charts today during our war room, right? We'll have done and dusted these trades, right? So silver did something, quite interesting. Those of you who were tracking it, I apologize. Oh, look at gold. Look at gold, though. Look at gold. Look at gold. Okay, I see. Right, so remember I said gold's going to break out of this consolidation and stop right there. I drew this weird yellow line for you, marking a bearish supply, and it did, and it fell. I'm not in this trade, so that's why I wasn't even aware that, this went well. But those of you who follow the war rooms religiously, we spoke about this, right? Break out of the consolidation, but believe you me, it won't even move past this yellow line. That's exactly what happened. I regret not putting a pending order there. But yeah, well, what a pleasant surprise. I was actually trying to find silver, not gold. But that's just how it works, guys. If you know what you're doing, right? So this is silver. Silver. If you follow where we were on the 17th of March is when I did the war room, right? The very next day, price fell. On the Monday, when markets opened on Monday, silver fell. Unfortunately for me, I did not trust this zone in my analysis. It very much looked like a liquidity type of setup. Why? Because there's a higher supply above. And whenever there's a higher supply above, my rules force me, encourage me, tell me, even if there is a 50% chance to make money, there's a 50% chance to lose money. And because of those odds, I don't like those odds. I like an 80% chance to make money, 20% chance to lose money. I decided to wait for a better sell setup all the way up there. But literally on Monday after the war room, markets used this first supply and dropped. And markets are allowed to do that. If you follow my silver analysis, I did say that, this is an interesting zone. There'll be no activity from me, but if you're a cowboy and you're feeling brave enough, look at what gold is doing. When markets get to this red zone, look at what gold is doing and then decide it is where you want to buy or sell. So this was silver. So I'm not in it. I'm waiting to be triggered there. So we did not lose money on my silver call, specifically my call, but we didn't make money, nonetheless. The next chart was USDJPY. This is the most important part of your trading, reviewing the tape, coming back to see your analysis and what the markets did. It's not enough to do it like this. Then you write that stuff down. You write what worked, what did not work. You match it with your rules. Then you back test it if there's a crazy, variable. You do this enough times, you do this for one financial quarter, and your trading generally should change, you know, dramatically, right? So USDJPY, as we said before many times, very, very strong bullish asset, monetary policy divergence, strong dollar versus a weak yen, you know, and all it is because I was stubborn to buy somewhere inside this channel waiting for a lower buy. Personally, I missed out on making money, but I didn't lose money. And I didn't lose money because I stuck to my rules. Anything could have gone wrong here if I decided to take a cowboy trade. And that's just how I am as a trader, especially as a swing trader. I'm easygoing, easy flowing. Money is always coming to me as it is leaving me, and I take that very seriously. Lessons from Ken Honda, because if you hold on to every single setup and demand you know, profits out of it, 9 out of 10 times you will always leave money by losing money, specifically losing money. So, you know, no fear, no qualms, right? Now that markets have been extremely parabolic on the daily time frame, I've been waiting for a good pullback retracement, right? And though markets are already very much close to the next target, somewhere up there in USDJPY, this could work. This is a clean cowboy trade area. I don't even want to lie to you, right? It could work. It's a perfectly low, far away from a supply. There's a high chance that before markets get all the way there, markets will first make contact with the supply and then come back down. Because of that, because markets won't be falling as a retracement, markets will be falling as a market reversal, and you have to know the difference, right? You have to know. Whoever is watching online, I trust I am audible. I am running a live stream, so you know how sometimes I forget to make sure my audio is fine. So if you could do me the favor and just let me know that I'm loud and clear, I would absolutely appreciate that. Otherwise, you know, I'm scared that I'll be 20 minutes in talking by myself here. You guys won't be able to hear me. If you could just do me that one favor, whoever is watching on live, just to give me a sound check, I would appreciate that. Right, so this is a market retracement for price to come down here now. But if markets make contact with a supply, right, I'm not here to teach today, I'm just here to kind of like review the tape, but we can talk about these levels again in the next war room, right? If markets make contact with a supply, then the supply is now in control. When a supply is in control, we get a market reversal. A market reversal is a different thing. When dealing, right, so there's some high supplies up here on the weekly time frame, and I'm assuming they're the same for the daily, right? So now when we get a market reversal, I don't like taking the first demand, because if suppliers are in charge, and I'm assuming sellers, then I'm assuming all the buyers want to wait a little bit, right? So there are a couple of tools that we can pull out now. Given that markets might be making contact with the market reversal, we could see the interest places for retracement. You can see our golden ratio is somewhere here from the bottom of this red zone into a demand that I've marked green. And that's honestly where I would like to make my first buy on USDJPY, all the way down here, although I do accept that markets could turn there, right? But anyways, from my trade call from last week, USDJPY, I'm still waiting to be triggered. So no money made here, no money lost here. Once again, if you're watching, please just say yes. Sound is good. Just please help me out here. I'd absolutely appreciate it. I just want to make sure that you can hear me. The next chart, number 3, that we discussed last week as we review these things, was AUDUSD. Beautiful fall. We spoke about this from a COT perspective. I found this to be kind of like basically a slight stop loss rate. This is not me. I am not in AUDUSD. If you go back to our YouTube video, you will see exactly what I said. Just click right there on War Room 63 last week Sunday, right? I want to sell here at where the FOMC last year said, look, man, we are looking at increasing the interest rate for the dollar. And that's when the dollar went crazy and all risk sensitive assets fell. Euro USD, AUD USD, pound, they all fell on the 16th of June at the same place. Now, markets came as close to that level as possible, but not close enough for me to feel inspired by the trigger, right? You can see my area of competition, for those of you who have taken my course, who have taught, when we talk about, institutional areas of competition, even that wasn't even triggered. So I'm not in that, at the moment. Wow. No one wants to tell me if I'm audible. Hey guys, can you hear me? Let me just type it in there. start the conversation maybe, right? So for that reason, I have marked this new drop here as a potential supply, as a potential retest. I won't be buying this thing because I really don't know where the safe bottom is. But if markets come, I am now open to considering that there might be a little bit of selling here. But because of its proximity, right, to 16 June supply, I will not be taking a blind sell. What that means is I'm going to have to open this whole area up, multiple time frame analysis, maybe on the 1 hour H4, find the highest sell point inside this wick here on the daily, and then my stop loss is going to be outside the 16th of June's area of value. I repeat, I'm going to find the highest triggering point inside this new zone, but my stop loss is going to be outside the 16th of June, right? And the reason for that is because whenever there are two supplies stacked up against each other like that, I generally want to sell as high as possible. So this white line is not where my stop loss is going to be. This white line is just a representation of where the area of value is for this area of value. My stop loss for any sells I want to take in the zone is going to be outside this area of value. All right, so I hope that's okay. Guys, I'm going to assume you guys can hear me because no one is saying they can't, right? But no one is saying that they can, right? So AUDUSD, once again this week, given to you guys last week, I'm still waiting to be triggered, right? So this was my money maker. Swiss franc JPY for the week was my money maker. I gave it to you guys last week, Sunday. And remember, guys, at 4:30 today, I'll be going live again with new trading setups. Every Sunday, the War Room does exactly that. So Swiss franc JPY right there, you just click on that, you'll hear the analysis last week Sunday. This was our money maker. I said, look, man, there's a daily supply, price makes context, and so far we're about 138 pips dip, but I suspect, I really do suspect that there will be a reversal soon enough, right? And it's not a nice feeling, right? So I will be breaking even out of this, or actually just closing at midnight when markets open, and just see, you know how far this fall goes, right? Swiss franc is generally weak, but when poised against JPY, we sometimes get. I'm good. Thank you so much. I appreciate that. Thank you so much for the mic check. Right, so for that, so if you're worried and you took this trade with me, break even. That's honestly my break even, or just risk the 5%. But that's really so far, it was quite a slow week for me in terms of currencies. Mind you, I am on sabbatical. By the way, someone posted something on the public group I just saw today, saying they're struggling to get a hold of me. I did announce this, guys. I'm on sabbatical for the month of April. I am on sabbatical. Okay, sabbatical means I've got administration leave, right, for my own trading floor. I am trying to quickly build my module 3, module 4 in the background, right? It's a lot of work, right? I don't cook and bake our courses overnight. It's a lot of work. So I am on sabbatical, but if you need to reach me, it's a good place to post on the public Telegram group. Someone always tells me to go see what's going on there every now and again, right? So thank you so much for the mic check there. Right, Euro AUD is trade number 5 that we spoke about last week. You just go click there, you'll see the analysis. I said I'm not selling here, cowboy zones. I would rather wait somewhere up there. If you look on the 2-hour time frame and see how strong prices kind of like entering this zone, right? Those of you who are selling, if you're selling, it's your right to sell, right? Just be very careful that this is how far you will go before markets pull against you. I don't trust this level for sell. That's why I marked it in red last week, right? This is, for me, an area that has really been, dealt with quite a bit in terms of price. And really, for it to draw this area, I guess in its original fold as a supply, it would look something like this. Even though that is the case, I am still not convinced at all that markets are going to stop there quite significantly, right? I really am not convinced that this is going to happen. On the H4, H2 time frame, we can see a PCP, right? That's how markets closed on Friday. PCP means potential continuation pattern. This to me is not yet a reversal pattern. It's a potential continuation pattern to the upside. On the 1-hour time frame, when you get down to the details, you can see some weird thing going on, but do not be fooled. That is not a bearish engulfing pattern, is it? Okay, it could be. It is. Right. So maybe on the 1 hour something might cook, but once again, all these weird levels that could push price back for me are not good enough. So I've no sell trade ideas in that area. I told you guys for Euro AUD, I'm going to wait a little bit, right? I'm just going to wait a little bit. I see there was a lag there, but yeah, I appreciate the thank you, Linus. Thank you so much for giving me that feedback, right? So nothing triggered there for me, because markets haven't arrived where I said they were going to arrive for me to be interested in selling pound Swiss franc. Right, we spoke about this last week. This is a beautiful cowboy trade, which unfortunately it went well, but unfortunately I did not take it. I hope that's clear. This went well, but I did not take it. I told you guys that this red zone, if you go back to the actual video, you'll hear me say it's a cowboy zone, and I won't take it, because I said that on Sunday when markets arrived. I got the alert on Friday. I think it was this Friday or Thursday, really quite recently, when markets arrived here, towards the end of this week, when the alert went on. And someone asked me how to set alerts, by the way, on TradeView. You just click here, and then you tell TradeView exactly where you want the alert to be. So you put a horizontal line or something, and then you put in those the values of where you want to be alerted, and then you can even make a few notes like buy or sell, blah blah blah. So that's how I normally set up my alerts, and it's linked to the app, email, whatever you want, right? So when I got the alert, for cowboys, and I looked at it carefully, I waited for markets to dig in deep and not break the supply. But then I decided not to take the trade, because I went back to hear what I said. And unfortunately for me, on Sunday, I already said, no matter what, I will not take the trade. And what I should have said is, it's a cowboy trade, it's high risk, take it if you want to risk, and because I really wanted to take this trade, right? This was a nice clean drop. So if those of you who took the trade, good for you. I unfortunately did not, but it was a nice clean drop on pound Swiss franc. And then we get to the CAD. So if you guys remember my analysis last week, Sunday, I said with CAD, be careful. On Wednesday, this past Wednesday, CPI data for CAD was going to come out. And then when it does come out, I'm assuming a little bit of strength, right? So we were right. CPI was wild, right? So there's nothing happening here. We already took the buy and exited long before CPI. So this is actually an old trade idea, so I should just delete it, right? So there's nothing for me to do, right? I couldn't take sales because I was worried about CPI coming out positive. And if you check the charts, if you check Forex Factory, CPI was actually positive. If you listen to what I said on Sunday, and if you paid attention on Wednesday this past week, CPI for the Canadian dollar came back ridiculously positive. What does this mean? Inflation is not just an American problem, right? It's not an American problem. There we go. Wednesday, CAD CPI 1,4. Wild, guys. This is crazy. Common CPI above. Mid is above. Like, it's absolutely insane. Like, everything, global recession is absolutely coming. But we'll talk about these big themes later on, right? So there's nothing to do on this chart. All I'm waiting for, to be honest with you, is to kind of like join the momentum up. We spoke about CAD, we spoke about oil, and we spoke about the war last week, Sunday. So if you want to review those main big thematic fundamental trade ideas and then couple them with good supply and demand, you'll see where I'm going with this, right? In fact, I told you guys that I actually regret exiting out of my buy here, but I'd already arrived at a daily supply, right? I should have just kind of like maybe locked profits or something had I known, and sometimes it's okay to take what you're supposed to take, out of the game. Blessings, Mr. Lincoln, good to see you, man. Right, so that was CAD, Swiss franc, and then my loss this week was CADJPY. Just to be fair on myself, guys, not that I don't want to be wrong, CADJPY, we were very clear, right? So if you come into this chapter, CADJPY, you will see that I was unfortunately or fortunately already in the trade, right? So the trade had already triggered. You can see literally in front of you here. I'm not gonna play back the audio. Oh no, goodness gracious, what have I done? Let's give this baby 2 seconds, right? But anyways, I was already triggered inside the trade, right? I was already inside the trade by last week's war room. And because of that, I say the only thing I can do in CADJPY, and let me just remove all these things so you can see it, right? And pause this in the background. I apologize. I just don't want any audio interference, right? So I was somewhere in here. So the 17th is already somewhere deep inside. So I was already inside the zone. My trade had already been triggered. And the only thing that I could do, right? Oh yeah, there you go. I wrote here, high risk, break even as soon as possible. Unfortunately, that whole week, markets didn't go lower last week. They didn't go any lower to give me a chance to break even. So this was the stop loss I took with a, with a straight L. I was selling at 0.30. And I lost about $446.01 after swap fees and everything, right? So this was my interesting, stop loss value. And I didn't tell you how much we made on, or it doesn't matter how much I made, like I said, whatever your lot size is. But with the Swiss franc JPY sell that did well with 138 pips, that kind of like balanced, but I still lost more money on this trade than I made on Swiss franc JPY because of how big my areas of values can be when I'm taking trades on the daily time frame, right? So this was my loss for the week. And then the last two, pound AUD, it depends if you took it. Unfortunately, again, I went to go see what I said on Sunday, and I'm going to be careful with my words from this Sunday. I don't want to say it's a cowboy trade, therefore I will not take it. I want to just say high risk area, cowboy trade, take it knowing there's a high risk, because some of these cowboy trades do well. But this one, like I said, all cowboy trades I'm not in, right? So I don't know who got triggered into, pound AUD right now. The rest of us, we are waiting for a better, selling opportunity above as market, play around with these zones. Remember, AUD in the background that we looked at its COT stuff. If this continues, if the FOMC comes through, and we'll talk about that today at 4:30 p.m. right? If this continues being weak, right, then you're gonna have a strong reaction, on the specific chart to the upside, right? So that's why I still don't think, I know for a fact I'm not gonna look for sell setups in here, right? But markets could fall for 30, 40, 50 pips before going back up. So for those of you who are day traders looking for movements up and down, just be aware that this for me is still a high risk area. So I didn't lose money there, but didn't make money either, right? And then the last chart that I looked at last week was NZDJPY, right? Which was, I'm basically waiting for a retracement fall. Remember, monetary policy divergence, as long as interest rates are going up here and things are maintained being weak there, this chart will keep going up. But right now we need price to kind of like retrace into one of these zones so that I can then buy safely. So I didn't bother to look for sells, although there were brilliant sell setups on the 1 hour time frame on NZDJPY throughout the whole week. But yeah, I let those go, right? So those are the main currencies, guys. So all in all, if you really think about it, if you've been really following, how I traded specifically now in terms of risk management, this was not a good trading week for me, right? If I was like really paying attention, right? Because my trade on CADJPY sell cost me 446, just hold on, 0.01. So I lost $400 US on CAD, and I only made on Swiss franc JPY sell, I only made 355 US dollars, right? So this was actually almost a negative week for me in terms of trading currencies only. And the only saving grace that I have that got me up to 1,000 US, because I'm already on a negative 100 here, between the profits of Swiss franc JPY and the losses of CADJPY, all right, the only thing that saved me was those two big trade ideas that I shared with you guys in the public Telegram group, right? So we spoke about how NASDAQ was falling and blah, 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 and indices and all that kind of stuff. And this was that setup that I gave you guys on the SP500. I looked at NASDAQ, US 30, SP500 on the public Telegram group. I was trying to teach you guys confluence issues, who's going to move. And this was before the American CPI. So the date here is pretty much the 11th of April in the public Telegram group. And I managed to take profit on all two of these big trades, US 30, SP500 on Friday. And that's how I ended up averaging out profitably. And there's a lesson in there. Set and forget, number one, which means if it matches your rules, take the trades. Number two, good risk management. Number three, average out profitably, right? So the first thing on the chart there is S&P 500. Once again, this is our public Telegram group. It's for free. I don't sell Forex signals, right? They literally down on Sundays in the war room, and other chats I'll post in our public Telegram group, right? So here's the trade idea on S&P 500. I want you to see it on the day, how it looks. This was sent on the 11th of April, all right? So everyone got it. 365 Traders War Room. Find us on there. It's for free. And I think US 30 sell setup is just above, surely, because I know I exited. Yeah, I'm right. There we go. Right, no confluence potential risk. There's the FOMC interest rate meeting. So, literally we were going down and I was holding, right? So I spoke to all these, trade ideas, including NASDAQ, right? NASDAQ with some intraday trades last week. I took 2 buys and then one ended up coming against me, but there's the red zone. And I said, all these trades are coming back. I mean, if you really want my wording, I said, all these trades are coming back to the 14th and 15th of March, where these assets had a buy recovery. So there was a market recovery from the original crash, the crash of the war, crash of inflation. I say there's no confluence on US 30 daily, and for those buys until recovery levels, these down here, this is the 14th of March. I'll show you now on the chart. Same thing with NASDAQ. Same thing with the S&P 500, 14th of March. This is where price is going, right? So this is literally what I said, and look at the charts where they are now, right? So I want to do this now, and I'll do them on Saturdays moving forward, so that at 4:30 p.m. when I'm now doing the war room, we don't have to go through the I was right, I was wrong, this is how much we made. But this is important. Reviewing the tape, guys, builds your confidence. The more times you see your trading strategy play out in front of you, the better. So there's that S&P 500 level. I'll take you back to the Telegram group. S&P 500 chart for supply marked out just before the first imbalance drop happens, and then markets then actually come back to our yellow zone, and boom, right? Perfect entry. And I got out here, even though I've marked the very bottom. You can see this is the 15th of March. There's that recovery buys that I'm talking about. There are lower demands, absolutely. But looking at this chart on Friday night, I thought, why would I take the risk? Now, today's war room, I'm going to have to teach a little bit as well. It just depends on time, because I think something interesting is happening in the markets. Like I said, I've been keeping track of the earnings reports, of how big stocks are going. And, there's a lot of things to be worried about. But one of the main reasons I got out here is because this is the top part of our bullish engulfing pattern. I absolutely agree that markets could fall a little bit further before going up, if they are going up. Right, this is one of those charts where 2 weeks from today, I might even regret closing. Right. This is very real. There's a high. It's a probability. It's not for certain, but I'm just saying the way things are in the markets right now, this could continue to fall down. But nonetheless, because we're sitting at a daily demand, I don't necessarily want to kind of like impose right on this area of value. So that's why I took my profits clean there on S&P 500, which then gave me an extra $258, which was, great, because now I was at least slightly above profit for the week. And then the last chart that I closed on Friday together with S&P 500, because these things move together, ladies and gentlemen, was the US 30 chart. I closed a little bit earlier here, even though once again, price could go as low as here. But I don't want to take that risk and markets move against me during the Asian session while I'm still asleep or whatever, right? So, and this chart here made me 864, right? So US 30, by the way, pays a bit more than most of your indices. A lot of people don't know that, right? So I got 864, 258, 864 from US 30, 50 cents, 258, 80 cents from S&P 500, and then 355, 41 cents from Swiss Franc JPY, and lost 44601 from CADJPY, which put me at a total of about $1,032 27 cents this week. And I'm absolutely looking forward to hosting you at 4:30 p.m. today, Sunday, for another war room. So we're looking at more currencies. We'll be looking at more trade ideas, but I'm going to have to start today's war room with a short market overview of new themes that I think should be coming out. And with that, God bless you. See you later. I will be live at 4:30 on the same channel. If you haven't subscribed, make sure you do subscribe. More details in the subscription box. Our course is going on 75% discount, 6 more days left for that, right, before that expires, and then we move everyone to a new platform, and we get going with the business of the day, right? So I appreciate you guys for watching this. I'm doing this for myself, but also for you. See your strategy. If you're not a supply and demand trader and you just happen to be on this channel, do it for your strategy. Stop buying and selling, seeing red and blue, having 55 trading signal groups, right? And not knowing the direction of your trading account. You have to see it. I know for a fact that I've been extremely profitable doing this, reviewing tape, going through my trading journal. I know I am more profitable doing that than just relying on a trading strategy. I am more profitable because I put myself on the spot all the time. I review myself. I never let a week go by without really assessing, was I drunk last week? I don't drink, but was I like ideologically drunk in the markets? Was I over drunk with euphoria? Did I think I knew everything and I got things wrong? Why did I lose to CADJPY? All right, I lost to CADJPY, by the way, because the trade idea was triggered before me even anticipating CPI, which was happening the following week. And that's okay. I also lost to CADJPY because that is actually a perfect example of a trade idea that has expired. All right, so if you actually go to my trading journal right now, and if I was to power up that spreadsheet, although it's the end of the video, you'd realize that the trade idea was set weeks ago, literally into February. Right, so as soon as markets were somewhere down here, I marked out this supply. This generally works very well for me because I get very busy, and that's just how I trade. I sit and forget. But when you mark out a supply somewhere in there, right, this was literally a month, almost a week into the war, and so many things have happened then. Was oil going to still be going up? All sorts of things have changed in relation to CAD. So this trade idea had expired, but I never went back to assess, right, my pending order for CADJPY to see if it was still a good idea to trade. All I would have to do is to look at the market structure from a higher perspective, right? So before the stop loss got hit, the fact that markets were extremely parabolic meant they were bulls, strong bulls. Remember, I've taught you guys about the arrow, right? Every time you're trading, if you see a setup that looks like an arrow where price is not distributing evenly before it arrives at your area of value, get out, because then it means that the buyers coming from the bottom is very strong, right? So had I done all of that on time, right, I would not have been I would have deleted the order. The problem number 2 with this trade idea was when I got triggered, I got comfortable because immediately markets dropped. So I was profitable for about 3, 4, 5 days. For a swing trader, after holding blue for 3, 4, 5 days, generally it's a good sign that markets are going to go your direction. In fact, most of the time when I get stopped out in a swing trade, it doesn't take time. It takes about 1 day to 2 days and I'm stopped out. But when I can hold the area of value and markets are going my way for 3, 4, 5 days, I move on with my life. I'm like, okay, cool. I'll see you at the next target. And after 3, 4, 5 days, markets literally started to reverse against me and I was already in, right? So by the time we did War Room 63, I was already triggered and I was actually now a little bit negative, and I was hoping for markets to come back here so I can break even. There will be a student or a human being across the planet asking me, Leroy, since you now could tell that this was going to go against you, why didn't you just close? Why not close at $200 loss versus holding until your stop loss closes at about 446? Is it not better to have closed at $200 loss? My answer to that thinking individual is absolutely, it is, if you know, right? I don't really approach stuff like this. So once I get triggered and my bias is now shaken, right? So my sell idea is now in trouble. What I then look at is how I'm managing my risk. If -4 something was less than 4 to 5% of what I was willing to lose originally in that trading account, which means I was okay with losing it. And it takes time to get to a place in your life, in your trading journey, where you're okay with losing money, right? If I was there and I felt like I'm okay to lose, then I generally would not have messed with the trade idea. Because what if I'm right? What if markets go down? And this is not the same thing as blind greed that I just want to make money. It's a real question. What if markets do allow me to break even? What if markets do drop a little bit and then come back? You know, I would not have known, right? It's easy to say that or to ask that question in hindsight. And in hindsight, based on this chart, I agree. I should have just closed that Monday when I was still in negative 200 and something actually, before losing the whole 400 and something. But again, it didn't happen. I warned you guys, those of you who are not in, it's a high risk area. Try and break even if you're already in it, and if you're not in it, leave it alone, right? So we're right now about CADJPY. CAD is strong, you know, oil is still doing the numbers up there, but we'll look at this stuff in the war room today. I hope this helped. 365, shake my hand, and I'll see you guys this afternoon, 4:30, for an actual traders war room, right? So here we're just reviewing good trading results, bad trading results for the past week, and we'll continue to do so. And then tomorrow in my social medias, I'll pull out some pictures and screenshots of all the trade ideas on my real account, so that you see the difference between liars and this industry. I'm just sick and tired of fake mentors, fake gurus, and people losing money, and really annoyed at human beings who, because they go get bad information, it doesn't work for them, they want to throw stones at the industry, right? It's not going to work like that. But anyways, this is good for you as well in terms of building your own confidence in smart money concepts. Shake my hand, guys. I'll see you later on today. Thank you so much for watching. Goodbye.